Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar trades above the 65-cent handle for this third consecutive day as the market now looks towards a potential target of 65.50-60. As solid domestic inflation data and improving sentiment from China has helped. Meanwhile, Australia's Q3 inflation accelerated to 1.3% from 0.7%, showing price pressures are still sticky and not exactly the vibe for the rate cut optimism from the RBA. Nevertheless, China adds fuel to the move, with the CPI turned positive at plus 0.2% year on year, and PPI declined slightly, hinting at stabilizing demand. Beijing also temporarily lifted its export ban on key strategic metal bound for the US, easing trade tensions and boosting market appetite for risk-sensitive currencies like the Aussie, while the US dollar was somewhat weak. Overall, though, the stopgap bill keeps the US government funded until January, and the DXY holds around 99.5 to 60. Markets are leaning for another Fed cut rate in December, even as officials preach caution and vigilance on inflation. As I said, the pullback may be temporary from the other day and still looks that way, and I still expect the rally. The euro still holding positive, as you can see here by the candles, and therefore looking up towards the region of 116. If so, we could see an extension from there. If you like drawing trend lines, well, you can add one there as well. So you can see from a break somewhere around 115.80 to see the rally on to 116 and maybe on to 117. Any pullback limited. Watch out for the bull trap when it comes to dollar yen, as it now trades above 154. Looking at the technicals, the MACD is still flat as a tack, and therefore I feel we could see a reversal, bull trap, and then a pullback. But we still need to see that key area, 152.90, break to support the bearish case down to this bottom of 149.5. Turning to sterling, well, the market was somewhat bullish and still likely to, as a possible target of 132.0515, and that needs to be breached to get the further extension onto 133. Any pullback limited. After jumping with this Marabouzu candle, further gains are expected now that I can hear the bulls cheer since 4,100 was reached. If so, we could be even looking on to now of 4,200 as a target. Strong technicals, a bullish ADX sees a little pullback. Wrapping up with all, little momentum, but are still in support of a further rally that could see a target around 62.5. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest report, and I hope you enjoy a great start to the day.